filings, startup registrations, MSME subsidies, virtual CFOs, environmental audit. So we could do a lot of such programs, and we were very happy that we could do value addition to our CA friends. And today is also in continuation to that, we are very happy to welcome our speakers, Mr. Dipesh Shah, Mr. Gautam Nayak, and Krishna Dwala sir, to a lecture on the Gift City. Now, I need not stress upon the importance of Gift City. We have seen today a small international event can change the stock market by 3,000 points. And Gift City aspires to be India's gateway, international gateway of financial services. And we are very happy that we have with us Mr. Dipesh Shah, who is the Executive Director Development of International Financial Services Center, IFSC. Now, most of us who have been in any kind of contact with Gift, we know Dipesh ji. He has over 21 years of professional experience in international business, project development, corporate affairs, and corporate law. And his most prominent achievement is the setting up of India's first smart city and IFSC, International Financial Services Center. Before joining IFSC in December 2020, in his last 12 years, his tenure was as Gift City, and in Gift City made substantial progress in getting recognition as India's model smart city, starting India's first multi-services SEZ and only approved International Financial Service Center. He brought in the regulatory and business changes in the Gift IFSC to bring in banks, which are now transacting to more than $125 billion international exchanges. And the international exchange was in fact inaugurated by our Honorable Prime Minister, whose daily turnover is in excess of $15 billion, and insurance and reinsurance companies for undertaking offshore transactions. He now heads the development of IFSC, and he is responsible for overall development at IFSC. Mr. Shah is a Bachelor of Commerce and Chartered Secretary from ICSI and Institute of Chartered Secretaries and Administrators, and has postgraduate diploma in business management, PGDBM, from Nirma University. He specializes in international business and finance, and he is currently also pursuing his doctoral program, PhD, in IFSC. So, very warm welcome to Dipesh Shah, sir. We would like you to speak now.
Thank you, Karan, and thank you, the Professional Development Committee at the Chartered Accountant Professional Association of Ahmedabad. We were very glad that, when we got the visitor in our IFFC Authority office, and I saw and met Karan and Munishi and the other team members, saying that, we are very keen to understand the opportunities for chartered accountants in the International Financial Services Center. And being from Gujarat and being a Gujarati, this was something, always gives you sort of a satisfaction that our own people of the state, professionals of the state, they are also coming forward and they are trying to associate with this important project. And I always kept on wondering as to why our professionals, whereas we've been seeing professionals coming from other states, coming forward for the opportunities that the Gift City is offering, why our own chartered accountants firms, company secretaries, law firms of the state of Gujarat, they are not coming forward. And that's where when I saw them and they invited me, I was very glad that this type of initiatives has been taken right in Ahmedabad for the opportunities. Let me straight jump to a small presentation because I think I have a limited time slot and would like to cover as many things as I can for the benefit of the participants today. You are all aware that Gift City is a unique venture of the Government of India in terms of setting up India's first international financial services center. And if you really ask from a professional perspective as to what an international financial services center is, the simple definition of an IFFC is it is a zone from a foreign exchange regulation perspective outside India. So when you do set up a business in the IFFC zone in India, virtually you become like an offshore entity or an offshore business, doing business in any foreign currency, not in the Indian rupees for the Indian market. And I think that's an advantage that the IFFC offers, that in the absence of IFFC, what would have happened is people would have set up their business operations in Singapore, Dubai, Mauritius, and other financial centers, and would do India business sitting there. During this period, what we saw, two things happened. Our own businesses went out of India. They went to other financial centers, and the business went out, and the jobs also went out from the International Financial Services Center to those outside India. And India in that terms was a net loser, because we were exporting business, we were exporting jobs to other financial centers. And that's where I think the setting up of Gibbs City as in both center for domestic and international financial services center was termed at that time by the Honorable Chief Minister and now the Prime Minister, which in a way brought into India the International Financial Services Center. Just go back the first slide. I think just for the benefit of some of the members who are on the today's webinar, this is actually the live photograph of Gibbs City. So many times people sitting even in Ahmedabad do ask me a question, वो Gibbs City क्या है, वो एक building है, वही है कि और कुछ है. And when they see the photographs now, when they come and see for themselves in the city, when they come, they see in the city operational from various perspectives, from commercial, residential, social facilities. More than 15 to 16,000 people are operating in Gibbs City now. So it's really a functional, smart city with a state-of-art infrastructure being developed. And you must, if you're not visited, from a nearby city of Ahmedabad, you must visit Gibbs City and see for yourself as to what opportunities it is offering you. The city has two parts. I think this is always a confusion that Gibbs City is something which is outside India or which is international, but that is not the case. Gibbs City has two zones. One is a domestic zone, which is similar to any other zone in India, and other is the international or called multi-services special economic zone, notified as an international financial services center. Today we are here to discuss more on the opportunities in the international center of Gibbs City. In terms of the journey, I think 2013, the first commercial building in Gibbs City got operational. Now I think close to 22 buildings are operating in Gibbs City. In 2015, the Government of India notified International Financial Services Center for the first time, thereby bringing the international financial services business right in India, rather than doing it from the centers outside India. I think between 2015 to 19, most of you are aware that the domestic regulators, namely RBI, SEBI, IRDA and PFRDA, they provided the carve-outs to do IFFC business, which was more a carve-out from the domestic regulations. But what international best practices and the other centers have seen over a period of time is that they normally have a unified regulator, and they have regulations which are more global or international oriented to do international business more efficiently. And I think Government of India really took a right step forward in December 2019, passed the International Financial Services Center Authority Act in the Parliament, and July 2020, the IFFC authority was headquartered in Gibbs City itself, where the first IFFC is operational. And on 1st October 2020, the IFFC authority has now been vested with all the powers of the domestic regulators, RBI, SEBI, IRDA, and PFRDA for the international financial zone. Now we are a unified regulator as far as the IFFC zone is concerned, thereby making it quite simple and easy for new institutions to come in and get operationalized in the IFFC zone. Once we took over the powers from the domestic regulators for the IFFC zone, we could progress some of the businesses. And our umbrella, I think this is an important slide for all the professionals who are on the call today, that the Gibbs City offers you an opportunity in all these segments, whether you talk it of a banks, insurance companies, capital market, asset management, or other, areas like finance company, global treasury operations, or emerging activities like global fintech, in-house centers, or international bullion exchange, and even aircraft leasing and financing. Now, to my surprise, I also have many chartered accountant friends in Gujarat, in Ahmedabad, And many times when I come across to them, they do ask me about what is the role that I as a professional can play in an IFFC. And then I always wonder that if they can do a bit of a deep diving into the areas of businesses which the IFFC is offering, they would figure out that the entire IFFC is meant for opportunities for chartered accountants. If you really ask me, from starting of a company to ensuring providing them the business plan, to ensuring that they tie up with the institutions globally, bring them, advise them in terms of their management operations, chartered accountant firm would have a major role to play in the IFFC zone. And that's why I think I'm very happy today that we are having this important conversation with all of you. In terms of, I saw that an expert is going to speak on a tax regime. I'm just giving an overview. I'm not a tax expert, but the Gibbs City IFFC provides a very competitive tax regime. We have 100% tax exemption out of 15. There are 10 years. You can choose any 10 years. There are no tax on your business profits. A minimum alternate tax has been brought down to 9%, which also does not apply if you are choosing a new regime. So virtually zero tax. And when you trade on the international exchanges in the IFFC zone, there are no commodity security transaction tax or a GST and a stamp duty. So in a way, very competitive regime offered for the businesses here. This is important slide for all the professional friends on this call. Normally, you all like numbers, being chartered accountants, and I think the number for Gibbs City is also very important. We already have seen stock exchanges in the IFFC zone having a daily average volume of $13.5 billion now. It was a bit higher, but I think during the last 1 year or so, due to this COVID and all, there's been a bit of a volume going down, but on an average, it has been $13.5 billion on a daily trading volume. Most importantly, banks, they have done $25.7 billion of banking assets in Gibbs City now by December 2021. This is very important. Let me take an example that what was happening earlier. Say, for example, Indian corporate, let's take any manufacturing entity in India or a large corporate in India wants an ECB. What will happen is that Indian banks in India will become an arranger, and the funding will happen from their Dubai or Singapore or other branches outside India. So what was happening is that our banks, the Indian banks, were only getting an arrangement fees, whereas actual lending and borrowings were done from outside India. With IFFC now coming into existence, what is happening is you can actually lend from an IFFC zone to India, which means say Reliance tomorrow wants $500 million. The bank sitting in an IFFC can provide $500 million to them in dollar terms at the dollar interest, which will be very convenient in terms of time zone and the cost wise both ways. So this is very important step forward, that we are now actually participating in the international business, whereas earlier we were only getting an arrangement fees. Same way, we have a large volumes in terms of banking transactions. We have a large volume now in terms of number of people operating here. And I think on the right side, the column would be very important for you, that the growth in the number of entities were up to 129 entities were there till September 2020. And now, as I speak, we are more than 300 plus entities in the IFFC zone, which means in last 14 months, we have close to 170 companies which have come in the zone. And I would sincerely urge all of you who are professionals that if you are not participating in this business opportunity of more than 170 companies coming to the zone, they all need professional service firms to help them. And I urge all of you that you should take a step forward, set up and understand what are the business opportunities for this different segments coming, and become one of the important participants to help the businesses to grow in the IFFC zone. We have come out with several regulations. I think you will be happy to hear that we have virtually all the regulations in place. And as a chartered accountancy firm, you will see your name also in most of the regulations, where you will be a certifying, in terms of several networks requirements, and also your scope is right there. Also, you can be an auditor also to some of the firms which are operating here. You can be consultant to them for forming their IFFC business, or you can be simply helping the businesses to grow. For say someone wants a dollar loan and you help them to be arranged through the Gibbs City branches of the banks operating here. Banks, we are close to 21 banks now. All the logos which you see, Indian or foreign banks, they already are present in the IFFC city, in the IFFC zone. And foreign banks like Standard Chartered, JP Morgan, Citibank, Deutsche Bank, they all are present here. I would also like to highlight to Karan and all of you that professionals have a lot of job opportunities in the IFFC now. So you should also keep a close watch for your chartered accountant colleagues, professionals, that they should keep seeing the job opportunities emerging from the IFFC zone. As I speak, I can tell you that at least 50 to 100 openings in various segments are happening for various professionals in the city, and this demand is only going to grow higher and higher as more entities are joining this zone. So I will urge all of you to have a deeper engagement in terms of professional job opportunities also in the Gibbs City. Very importantly, we are now coming up with the retail products. So if you want to have always an idea of holding Google stock or an Amazon stock, it will become a reality soon now. In few days from now, NSE is starting unsponsored depository receipts on the NSE IFFC exchange, and you will be able to buy under the LRS 250,000 limit this stock. It will come in your depository receipts in your account, and you will be able to have a settlement guarantee through the IFFC exchanges. So tremendous opportunity to participate there. We're bringing the NSE SGX Nifty also on this platform, and India INX, which is the BSE's international exchange. They have structured a lot of ways of participating in the global exchanges through the IFFC platform itself. We have a lot of bond listing happening here. So now people are raising bonds. Axis Bank, SDFC, all have raised bonds from here. Exclusive listing happening here. So you can be an arranger also. You can help the banks and the PSUs and the private sector companies to raise the bonds from an IFFC market. We have a large number of alternate investment funds operating here. So close to 55 alternate investment funds are part of the ecosystem now. And they have given us plan for raising $5 billion of funds from the IFFC zone. So they need people as investment advisors. They need people as for trustee services. They need people for accounting, auditing, outsourcing work. So a lot of opportunities for all of you with this segment. I'm not going in deep details of this slide, but one line that the Global or Regional Corporate Treasury Center is an opportunity. You can tell your corporates with whom you have your assignments that they can look at setting up a corporate or a global regional treasury center in the IFFC zone. We have also bond listing happening here. So when you list bonds here, the tax is 4% withholding tax versus 5% when they're listed in Singapore or London or Luxembourg stock exchanges. So that's a 1% advantage of bonds being listed here. Recently, Reliance has done their secondary listing of $7 billion bond on the India INX platform in the IFFC zone. We also have an insurance. So if anyone wants dollar insurance, we have insurance, reinsurance companies. They are already part of the ecosystem, and you can help them take dollar insurance from an IFFC zone. Here also, I think a lot of opportunities for chartered accountancy firms are there. Aircraft leasing is a new business which has been developed first time in India. And in last 12 months, we got 13 companies now licensed for aircraft leasing. And 2 aircraft have already been leased from an IFFC into India. And we have a pipeline of 29 to 30 aircrafts which are being slated to be leased to India from this zone in the coming year. So a lot of opportunities in the aircraft leasing space also, where you as a professional should have a closer look. I think most importantly, this is my last slide, but most important slide for all of you. We have come out with an ancillary framework, which is to bring in the professional service providers. So if you are a chartered accountant, if you are a company secretary, if you are a law firm, you all have a opportunity to operate from this zone. All the consultancy firms, law firms are already part of this ecosystem. I'm the C&K, the chartered accountancy from Ahmedabad, were the first, I think, who came and set up here. And I'm sure they are also today one of the speakers, as I saw that they will share their experience of coming to this zone and what all they are doing, how other firms can also try and see what all they can do from this zone. I'll stop here. I am thankful to all of you of having me here, but I'll be very happy to take questions that you have in terms of the opportunities or for you to set up your businesses in the IFFC zone. Thank you very much to the team, Chartered Accountancy Association of Ahmedabad. We are very glad that we are connected today, and we would love to host all of you to Gift City as a part of a delegation or as a one-to-one whenever you want to come on this side. Thank you.
Thank you, Dipesh sir, for your kind words and for explaining us the initiatives taken by the Gift. Karan, if we can take the question answer, if somebody has a question, can unmute and we can take them. Ronak and Karan, if we can step in.
Yes. I think right now there are no questions in the chat box. Okay, we just got one. My client is having a subsidiary outside India. He wants to open. Still, the question is. Okay, the basic question is.
Yeah, take it, Ronak.
The basic question is whether a trading business can be conducted in the Gift City or not.
So right now, in terms of the businesses, the trading in securities, that is what is permitted. So if they are part of, say, trading activities for securities, they can come to the IFFC zone and do trading in the IFFC market. They can trade any market globally also through the IFFC arrangements. So yes, the opportunity from trading securities is already there. But if they are trading into some products and commodities, this is right now at the financial services and related allied activities. We are not directly into trading of products, but for securities, absolutely there is an opportunity.
Okay, there's a subsequent question to that. Whether they can open office to obtain international finance for their foreign subsidiary.
Yes, they can, because institutions in IFFC can fund in the IFFC zone. They can fund any businesses outside India. So a bank in IFFC can fund Indian joint venture abroad or Indian wholly owned subsidiary abroad or foreign companies abroad. So they can source or they can try and see what funding they can get from the IFFC institutions.
All right. The next question is, it is a Ahmedabad-based company and they have a WOS in Dubai. Can they raise funds for the WOS Dubai from Gift City?
Answer is yes.
Whether sandbox testing is mandatory for fintech solutions provider company?
See, it depends on the type of the activity that you want to come in. If there is something which is not already a commercial activity happening and you want to test your product, we have a fintech sandbox platform. You can come in the sandbox innovation box, test your product. If it gets successful, then you can get a commercial license from us and get into any of our commercial license and then undertake your normal business activities.
The next is whether the foreign subsidiary can open office in Gift City and handle their international business.
A company from India can open a subsidiary here or a branch here. Company from outside India can open a company here or a branch here. Everything is permitted. Company from India who comes here has to follow the ODI rules, overseas direct investment rules, because this is an offshore zone for India. Company which comes from outside India wants to set up a subsidiary only needs the Ifsc IFFC authority approval based on the business activities that we have enabled. So if he falls in any of our business activities and the regulations, they can set up a subsidiary and get operationalized.
Right. The next is, can a company in India eligible to open office in Gift City for global trading business thereby earning foreign commission from overseas principals?
So when you say foreign trading, meaning that this, I understand the question is more from a merchant trading type of an business activity. As I said, right now the trading from the securities perspective is enabled, and you can be here as a broking firm, and you can trade any market globally. You can allow the clients to trade through you as a broker, and you can earn fees. But the merchant trading type of an activity today, as an IFSC authority, there is no separate regulations. It's still a work in progress, and we have to see as to how the financial services can be enabled under this framework.
Right. There's one with whether a proprietorship concern can be set up for engaging in business of fintech solution softwares. I'm not sure if this is relevant as of now. If you can answer.
Sorry, I didn't get the question. What was the question?
Whether a proprietorship concern can be set up for engaging in business of fintech solution software.
Yeah, so currently the company which comes here has to be in the form of a LLP or a private limited company. Sole proprietor we don't have, because at this stage, what we encourage is obviously they are at the testing ground. They can test their product, but when they are coming to a stage where they need to be operationalized, they need to have an entity status here.
All right. New fintech providing payment solutions, software and technology, can they register as IFSC unit and get tax benefits without sandbox trials?
See, we are in process of framing the fintech framework, which will have two components. One is the sandbox approval, and the other is the direct authorization. So this is still work in progress. Once that comes out, then there could be a possibility of the entities which can come directly under direct authorization in the fintech framework. Else, currently they can come in the sandbox, or if they are financial or aiding and assisting financial services, they can come under ancillary framework that we have.
Right. Okay, there are a few more questions, but what we can do is we can circulate them as we decided earlier, and if Dipesh and his team can later on answer those questions.
Yeah, maybe we can take the detailed questions at the end of.
Yeah.
All right.
All right. Fine. So thank you, Dipesh bhai. Thank you so much for the complete insight that you have given on Gift City and IFSC, and we hope that you can attend the later sessions that we have on this particular area, Gift City and IFSC, regarding taxation and the opportunities for the chartered accountants. Karan, over to you.
Before Karan takes over, Dipesh bhai, we would definitely like to have a small delegation from the association come to your office, and probably we can again discuss this on length with regards, because physically meeting would definitely give a better idea and better scope.
Most welcome. I think we'll be happy to interact with all of you when you come to Gift City. We'll be very happy.
There is one request that has come across from Niranjan Shah. What was his question? He is asking, please take this question. Niranjan bhai, what was your question? Please unmute yourself and ask. No.
I have posted.
Yeah. Please ask your question.
Sir, payment made by any Indian party to a foreign vendor who has a bank account in Gift IFSC. Okay. So can that payment be considered for the purpose of income tax as an income deemed to be received in India? Because in the income tax they have not excluded the gift from the definition of India. Any thoughts on this? Hello.
So from a FAMA perspective, IFFC is offshore. It is a resident outside India. From income tax perspective, IFFC is part of India. And what the government has done, they under Section 80 LA, separate carve-outs has been given for tax exemption. So from income tax perspective, you are right. This is part of India. It's not considered outside India.
Okay, then such payments would consider that deemed to be received in India.
See, this I have to check and come back to you. Let me have a closer look at it.
का तो अभी हाँ exemption है वो अभी और आगे आएगा वो.
Sorry. Hello.
Yeah, I will come back. We will come back to you on this.
Yes. Thank you very much, sir. Thank you.
Thank you.
Munish bhai, can I ask a question?
So last question, because he also needs to, he has a commitment.
Can I ask a question? Are you able to hear me?
Yes, Subodhji, please go on.
Sir, the main idea is that I had got a overseas subsidiary. They are managing their international business. For managing the finance and to provide the finance, can we open an office in Gibbs City and can have an operation here?
So from the corporate treasury, as I highlighted in my presentation, that we have a framework for corporate or regional treasury center. You can have a look at it. There we have allowed the entities to set up here and become like a centralized regional or treasury center for the group companies. So you please have a look at this framework. If there are any further questions, once you go through that, we'll be happy to take it from you.
Okay. Thank you, sir.
All right, so we can take the remaining questions at the end of this lecture. And now I would like to invite our convener of PD committee, Mr. Ronak Khandwala, to come and introduce our next faculty.
Thanks, Karan. So our next session is on the taxation and regulatory aspects in Gibbs City and IFSC. And it is my pleasure to introduce the speaker for this session, CA Gautam Nayak. He's a practicing chartered accountant since 1986 and a senior partner at CNK & Associates LLP, Mumbai. He has held various positions, such as he has been a president of Bombay Chartered Accountants Society in the year 2004-05. He has been editor and joint editor for monthly BCA's journal, co-chairman of the Direct Tax Committee and member of Finance and Investment Committee of IMC Chambers of Commerce. He was a chairman of Taxation Committee of BCAS, as well as chairman of International Taxation Committee of BCAS. He has also co-authored 4 editions of Transactions in Shares and Securities, Taxation and Accounting, as well as 4 editions of Taxation of Charitable Trust published by BCAS. He has also co-authored Technical Guide on ICDS and Taxation of Charitable Trust published by ICAI. He has been a regular contributing articles to professional journals such as BCAS journals, Income Tax Review, and AIFTP journals. He writes fortnightly columns on personal taxations for the financial newspaper Mint and also contributes articles regularly to the Economic Times, Outlook, Money, and Open. He has delivered a number of talks and papers at seminars organized by various professional bodies such as ICAI, ICS, BCA, Chamber of Tax Consultants, and others. He has also delivered talks and programs and training conducted by corporates and others such as IMS Chambers of Commerce, CRISIL, National Academy of Direct Taxes, RBI Bankers Training College, and National Insurance Academy. He has appeared on CNBC, CNN, Bloomberg as a panelist on various discussions on taxation and audit. With this, we welcome you, CA Gautam Nayak, and please share your views on the session today. Thank you.
Thank you, Ronak. It's a pleasure to be with the Chartered Accountants Association of Ahmedabad today and on the topic of Gibbs City. I think the regulatory aspects, there are quite a few interesting things, in this, which we see from a regulatory and tax perspective. And, various questions also do come up, and what I will in the next 20 minutes or so, I will try and take you through the various issues and the various questions which come up. So if you look at the whole regulatory background, I mean, the whole objective, as was pointed out, Mr. Dipesh Shah initially was, what is the IFSC? You're looking at the whole international financial services business, just as you have London, New York, you have Singapore, you have Mauritius, etc., where these are financial centers which carry on international financial business. So the objective is that some part of that business could be carried on in India, where it would not be, the restrictive provisions of Indian law would not apply to that. So that was the whole objective from which this was conceptualized. So that why should India lose out on employment? Why should India lose out on the infrastructure, etc.? So it's from that perspective that this International Financial Services Center was conceptualized. And the legal framework is, it basically, IFSC is basically a special economic zone. If you see Section 18 of the Special Economic Zones Act, where central government can approve an IFSC in a SEZ and prescribes the requirement for setting up an operation of such center for such center. But you cannot have more than one IFSC in a SEZ. And the central government may prescribe the requirements and the terms and conditions for operations. And this will be subject to guidelines issued by RBI, SEBI, IRDA, and other authorities. And accordingly, in 2011, GIFT SEZ was notified as a multi-services SEZ by the government. And we had the Ministry of Commerce and Industry notification of 2015, where they said that for IFSC units, what is the framework for that? They said units of IFSC can be set up and approved in accordance with the SEZ rules. It will be subject to guidelines. And at that point of time, the guidelines were issued by IRDA, by the RBI and the FEMA, by RBI under the Banking Regulation Act, and by SEBI. So the guidelines were issued in 2015, in March and April 2015. So these were the original framework in which it was set up. Thereafter, we had the IFSC Authority, which was set up under the IFSC Authority Act 2019. And all the powers exercisable by RBI, SEBI, IRDA, and the Pension and Finance Regulatory Development Authority for regulation of financial products, financial services, or financial institutions would now be exercised by the IFSC Authority, so far as these entities located in this jurisdiction are concerned. RBI, the powers could be in respect of FEMA, it could be in respect of the Banking Regulation Act, as well as other acts under which RBI has the powers. So all those powers, it's not just under the FEMA or under the Banking Regulation Act, various acts which are governed. The FEMA, from FEMA perspective, if you look at it, that a financial institution or a branch in an IFSC is to be regarded as a person resident outside India under FEMA. And therefore, any transaction by such an institution or branch which is set up in the IFSC, which is GIFT City, transaction with a person resident in India is to be treated as a transaction between a resident and a non-resident, and is subject to the normal provisions of FEMA and the rules, regulations, directions thereunder. So therefore, what we are saying is that though it is physically, the financial institution or branch is physically located in India, it is regarded as if it was located outside India, and accordingly, all the FEMA provisions have to be construed. This institution or branch has to conduct such business in foreign currency and with such persons, whether resident or otherwise, as the concerned regulatory authority will determine. And in this case, it's the IFSC authority which will determine that. Those regulations issued by them, they determine that. And basically, the FEMA notification says that nothing contained in any other FEMA regulation will apply to this financial institution branch of a financial institution set up in an IFSC. And exception to that is, Section 1.3 of FEMA is the exception. Because what does 1.3 of FEMA say? It says that all branches, offices, and agencies outside India owned or controlled by a person resident in India, is the thing. That is the exception which is there. So therefore, if it is a branch, office, or agency outside India, so here in this situation, so that Section 1.3 will apply is what they say. And otherwise, if the RBI directs from time to time, that will those provisions will apply. Now, question here which arises is that very often people think that suppose if I were to set up in an IFSC, whom can I deal with? That's a question which very often arises, that can I deal with a resident in India? Can I have my transactions still with residents in India? And if you look at, for instance, let's look at ancillary services. Ancillary services, as we saw in the earlier presentation, it includes accounting services, it includes legal services, secretarial services, accounting services, etc. So it can deal only with entities set up in the IFSC. So entities which are already there in the IFSC. It can deal with the financial services entities from foreign jurisdictions or Indian entities who propose to open, set up or career operations in the IFSC or foreign jurisdictions. But the consideration has to be received in freely convertible foreign currency in this situation. Similarly, so far as capital market intermediaries such as stockbroker, merchant banker, banker to issue, trustee of the trustee, registrar to issue, etc. concerned, the regulations which apply to it is the IFSCA capital market intermediary regulation, and the services can be provided to non-residents, the person not resident in India, of which includes, of course, a non-resident Indian. It also applies to a non-individual resident in India who is eligible under FEMA to investors offshore. So a company can invest, for instance, into a wholly owned subsidiary or joint venture under the FEMA regulations. Now, therefore, to such an entity, the services can be provided to the extent that it's investing offshore. Similarly, if an individual resident in India, to the extent permitted under the LRS scheme, as you know, under the liberalized remittance scheme, an individual is permitted to remit up to $250,000 overseas. So similarly, that individual can invest in through the IFSC, through an intermediary in the IFSC, can render, take the services of an intermediary in the IFSC for that up to $250,000. So it will be as if he's remitting the money abroad. Instead of remitting the money abroad, what he's doing is he's investing the money in the IFSC, so stock exchange in the IFSC, therefore where he may use the services of a stockbroker in the IFSC, or he may use it, for a portfolio manager. He may give the money to a portfolio manager in the IFSC to invest it in his behalf in, securities, in overseas securities, or in securities traded on the IFSC stock exchanges. The permissible investments, of course, are securities listed in the IFSC, securities issued by companies incorporated in the IFSC. This is in relation to capital markets. So securities issued by companies incorporated in India or companies belonging to foreign jurisdictions. As was pointed out, Reliance has recently made an issue on the IFSC exchange, so which is listed there. So units of other AIFs set up in IFSC in India, there are certain provisions relating to those, and other permissible investments as per AIF regulations, etc. Now, who are the permissible investors? A person resident outside India, that is a non-resident, is allowed to invest. NRI is allowed to invest. Companies subject to the limits for outbound investments, the wholly owned subsidiary, joint venture, those subject to that, they can invest. An individual can invest up to his LRS limit, as we saw, so that he can invest in the securities listed in the IFSC, he can invest, but it's almost as if he's making a foreign investment. So that's how it is. So for under FEMA provisions, etc., the way it is, it's as if you're making a foreign investment. That's the question is, of course, we look at it when we look at the income tax provisions, whether it is advantageous, firstly, for a resident, what is the position so far as a resident is concerned? Because that is the question which very often people ask, can a resident do it, and is it advantageous? What is the benefit to a resident so far as that is concerned? And so these are the questions which we'll look at. Now, what are the key income tax benefits? As I think in short, Dipesh also pointed out, is you have a tax holiday for units which are located in Gibbs City for 10 consecutive years out of 15 years. And it's from the year in which that 15 years starts from the year in which the permission for setting up was obtained for the unit in the Gibbs City. So you have to select whether you want, suppose the unit is making a loss in the first initial years, you might not opt for it. You might opt for, say, from year 3 or year 4 or etc. You can decide you feel it's more profitable to get the exemption latter years. You might choose to do it in latter years. If a non-resident gives a loan to a unit in the IFSC, and if that loan is given after 1st September 2019, the interest earned by that non-resident is exempt from tax. For units in the IFSC, MAT rate of 9% applies as against the existing 15% rate. But the language is such that effectively the company should have only a unit in the IFSC. It's only then that this MAT rate of 9% applies. Say today, if say you have an Indian insurance company, like say a New India Insurance has a unit in the IFSC. Now, so far as New India Insurance is concerned, the MAT rate which would apply would be the 15% rate, because its unit is the IFSC is only a part of its business. it has substantial other business in India. So therefore, it's only if you have only units in the IFSC that MAT rate of 9% would apply. In case of non-resident operating in the IFSC, even if income is taxable on a gross basis, you have under 115A certain incomes such as interest, dividends, royalty, fees for technical services, which is taxable on a gross basis at 20%, at 10% for royalties and fees for technical services. For interest, you have at 5%, etc. And so you have these, it's taxable on a gross basis, but at a flat rate of tax. But even in these cases, for profits of a unit, the IFSC is allowed. So therefore, whatever is the profits of the IFSC, the income of the IFSC, to that extent, it will be allowed as a deduction when you're calculating this tax. So then you have section 115A4, which allows you this deduction. Even if, as you know that under section 115BAA, a company can opt for the concessional tax rate of 22%, and that 22% translates into an effective tax rate of 25.17%. So if a company opts for that, as you know, it does not get any other deduction under Chapter 6A except Section 80JJA, and Section 80M was there last year. So question is, will it get the benefit of the deduction under 80LA? And yes, it will get the benefit. So even if it gets off for that concessional tax rate, the profit for units of a located in GIFT City, that will still be allowed as a deduction to such a company. Then coming to the question very often which people ask is, so therefore, can I set up, I have an existing business, and can I transfer, some of this business to the unit in GIFT City, and really, actually I'm doing the most of the work from outside GIFT City, and I still, can I still claim exemption by showing profit high over there? Now, what you have to understand is that any transaction between a unit in GIFT City and a unit outside GIFT City, or the head office, for instance, so any entity in India, that will have to be, because you have section 80A6, which applies to section 80LA, and therefore that will have to be undertaken at market value. And if the inter-unit transactions exceed 20 crore, domestic transfer pricing provisions will apply. So that's what you need to keep in mind. So therefore, you need to ensure that the transactions are at arm's length, even if you have transactions with the head office or any other unit located within India, along with the unit in the GIFT City. So you will have to do it at arm's length price. Effectively, that's what you'll have to do. In fact, there is a requirement for the auditor to certify the deduction, which is under 80LA. You have to file the form 10 CCF, the auditor certification. Obviously, because this is a deduction from the gross total income, if your gross total income is a loss, or the unit has incurred a loss, then no deduction would be available under section 80LA. Banking units, I think I will just not, so there are various exemptions which are available for banking units, but I think offshore banking units, let's not really get into the nitty-gritty. But yes, there are some benefits which are available to them. So far as capital markets are concerned, there is no tax on capital gains arising to non-resident. On transfer of specified on transfer of specified assets, if he transacts on the stock exchange, recognized stock exchange in the IFSC. And what are those assets? Bonds or global depository receipts, rupee-denominated bonds of Indian companies, derivatives, foreign currency-denominated bonds, units of mutual funds, units of a business trust, that is REITs or InvITs, foreign currency-denominated equity shares of a company, or a unit of a AIF. If these are transacted on the stock exchange in the IFSC, and where the transaction is effectively, the consideration is payable in foreign currency, in that situation, the capital gains will not be taxable. But as I said, it applies only in case of a non-resident. A resident cannot take the benefit that today cannot say I'm investing under the LRS on the IFSC stock exchange, and the capital gains I will claim exemption. That benefit will not be available to a resident. So far as a resident is concerned, the normal provisions would continue to apply to a resident, because the worldwide income of a resident would be taxable in India. So therefore, that benefit will not. So the benefit really is for a non-resident. If a non-resident had transacted in India, he would have had to pay tax under section 112A or 111A at 20%, at the rate of 10% or 15% on long-term gains or short-term gains. Now here, he gets a complete exemption if he transacts on the IFSC stock exchange. Then, so far as the Category 3 AIF is concerned, now if all the units are held by non-residents, then if certain types of income of a Category 3 alternative investment fund are exempt. As you know, alternative investment funds are of three types. You have Category 1, which is basically venture capital fund, it's a SME fund, or there are 3 or 4 categories of those funds. Second, the Category 2 fund is a fund which is neither Category 1 or Category 3. And Category 3 fund is typically a fund which trades regularly, which employs leverage, etc. That's a Category 3 AIF. Now, Category 3 AIF does not have the pass-through status which is available to Category 1 or Category 2. And a Category 3 AIF typically would have business income in most situations. And that business income would be taxable. And, of course, if it's structured as a trust, it would be taxable in a normal situation. And in India, it would be taxable at the maximum margin rate. Now, here what we have is that for Category 3 AIF, which is all the investors are non-residents, of course, there, as you know, a sponsor or manager is required to have a skin in the game, and therefore he's also required to hold certain units. So they say, other than those which are held by a sponsor manager, all the other units are held by non-residents. Then gains on transfer of specified assets is exempt, where consideration payable in foreign exchange. Gains on transfer of securities is exempt, other than resident Indian company shares. And income of securitization trust, is also exempt over here. And on other transfer of other assets, it's taxable at 10%. So if the AIF has resident investors also, to the extent held by residents, it would be taxable at 10%. So that's the provision. So that's a benefit which is, see, today, does it make sense setting up a Category 1 or a Category 2 AIF? I think it doesn't make sense, because Category 1 or Category 2 AIF in Gift City, it will get a pass-through status, and therefore it will be taxed as if the non-resident had invested directly, or so I know there is no benefit so far as those investors are concerned. Similarly, for a resident investor also, it doesn't make sense, because for Category 1 or Category 2, they are pass-through entities, and therefore the entire income would be taxable in the hands of the resident investors in that situation, if it's a Category 1 or Category. But Category 3, because it is taxable at the entity level, at the AIF level, and that's where the advantage is. And if the AIF itself also does not pay tax, then effectively the investor, particularly non-resident investors, get the money without payment of taxes. That's the advantage which is there so far as the Category 3 AIF is concerned. Income accruing arising on transfer of units of Category 3 AIF, again, by non-resident is exempt. Relocation of funds, if a fund outside India is relocated, where the assets are transferred to a fund in the Ifsc in the Gift City, and the units are allotted, etc., there is exemption of capital gains. There is a benefit of lower tax rate for capital gain and transfer of shares listed on recognized. So if a resident invests on an Ifsc, now one of the conditions that for 111A lower tax rate or 112A lower tax rate is that securities transaction tax should be payable on such transactions. Now here in this case, on Gift City, there is no STT, there is no CTT. So in spite of that, the benefit of the lower tax rate would continue to be available under Section 111A and 112B for a resident who invests, because there the income is taxable. So that's the benefit which is provided there. If a fund manager is located in the Ifsc, it's as if the fund manager, as Section 9A, it would apply in that situation also. There is so that business, it would not amount to business connection in India. So that is the a non-resident deriving income from a securities. Now the budget 2022, I think, has proposed two further exemptions. One is for income received from non-residents from a securities portfolio managed by a PMS located in the Gift City in account maintained with the offshore banking unit, if such income accrues or arising. So, for instance, you could have a portfolio manager who's sitting in Gift City, who's managing the portfolio for you, and that portfolio is invested in foreign securities. Now so the income from the foreign securities accrues or arises outside India. So just because the portfolio manager is sitting in Gift City, it does not mean that the income is taxable. And this applies, of course, to non-residents. So non-residents, just because the portfolio manager is located over there, so therefore it does not mean that that income will be taxable in India. And again, if a company, Indian company, issues, as you know, you have 5627B, which says that if a company issues shares at a price higher than the fair market value, the excess amount can be over the fair market value can be taxed as the income of that company. You have an exception to an AIF which is registered with SEBI. Now, an AIF which is registered under IFSC, so that also has this benefit, because say today you could have a category 3 AIF which is located in the IFSC that may be investing in an Indian company. The benefit of that exemption under 5627B will be available to that entity as well. Aircraft and ship leasing, I think I will not touch upon that, but because that's a very specialized area, of course, but there are benefits available there, because today, a lot of aircraft, say for example, Ireland has been a preferred destination for taking aircraft on lease because of the favorable tax treaty, but Gift City is also being sought to be made popular in that sense from that perspective. Indirect tax, certain benefits are there, and there is no GST on services received by a unit in IFSC or provided by a unit in IFSC to IFSC or SEZ units or offshore clients, so there is no GST applicable there. Transactions carried out on IFSC exchanges, there is no GST on commodity derivatives transactions, etc. There is exemption from stamp duty and registration conversion fee, etc. Then various other Gujarat state government subsidy like reimbursement of provident fund contribution by employer, lease rate subsidy, etc. Those would apply. And there are a few other benefits, exemptions which are available under the Companies Act for a company which is set up in the IFSC. The CSR provisions are not applicable for 5 years from the commencement of operations in the IFSC. Internal audit will be applicable only if the articles of association of the company require that. There's no requirement to set up an audit committee, nomination remuneration committee. There's an exemption from those requirements. And the limits on managerial remuneration would also not apply to a company located in the Gift City. So I think that covers in broadly, I think, the tax benefits which are available. Thank you.
Yeah, thank you very much, sir. And a very detailed lecture rather about explaining all the taxation aspects. And thank you very much. And now I would now like to invite Rushabh Shah to give a brief introduction of Krishnadwala, sir.
Thank you, Karan. Thank you, Gautam, sir. Very warm welcome to everyone. Over to Krishnadwala, sir, for the next part of the lecture, which is going to be on the opportunity for CAs, which we probably a lot of people are here for. Talking about Himanshu Krishnadwala, sir, I'll introduce. He is a Bachelor of Commerce and a Chartered Accountant with distinct credentials of being a rank holder both in inter and final CA. Being in practice since 1985, he is currently a senior partner in C&K & Associates, LLP Mumbai. He oversees the audit and assurance practice of the firm, particularly audit of large corporates, India's implementation, due diligence assignments, and conversion of financial statements from IGAAP to IFRS or US GAAP. He's an ex-senior lecturer in accountancy and computer systems at Narsi Munji College of Commerce and Economics. At the ICI front, he is a co-opted member and special invited in various committees like Accounting Standards Board, AS Implementation Committee, Expert Advisory Committee, Research Committee, and Corporate Laws Committee. He has served as the president of the BCAS in 2006 and 2007. He has been a member of various audit committees of various companies, and he has delivered innumerable lectures. So welcome, Krishnadwala, sir. Over to you.
Yeah. Thank you, and good evening to everyone. The president of the CA Association, the other office bearers, and everyone else present on this webinar. It's a pleasure to be addressing all the participants on what are the opportunities in the Gift City. And after a very nice exposition by Dipesh on what is the Gift City and what all are they going to provide, and the benefits which are given by the government on the direct tax and the Companies Act and the other fronts. I think with all that, finally, as professionals, we are looking for as to with all that which we understand in the background, what is in it finally for me in that sense. So what I have tried to do is try to get together a few services which chartered accountants can provide in the Gift City or the IFSC. And I would like to share that presentation, but I think the Organizers will need to enable me to share the presentation. So can, I don't.
Yeah, I will just give you the right, sir.
Yeah, please give me the rights to share the presentation.
Done that.
Yeah, okay. So can you all see this now?
Yes.
Yeah, so this is opportunities for chartered accountants in the Gift City and IFSC. Now, before I get into the opportunities in the Gift City per se, as chartered accountants, we typically do this 5 things. So we do audit and assurance. We do this what we call governance, risk and compliance, which is internal audit, process reviews and so on. We do direct tax, which could be compliance, advisory, litigation, domestic, international, cross-border, etc. We do a lot of indirect tax, which is again compliance, advisory on GST, customs, SEZ, FTA, and so on. And finally, all of us also do a lot of consulting and business support services, which could be advisory on M&A, jurisdiction identification, accounting compliance, outsourcing compliance, tax compliance, which a lot of firms in Ahmedabad do this tax compliance for US tax returns, and Australia accounting compliance and other things which is there. Now, all these things are also going to be applicable when you start giving some services in the Gift City. It may not be directly applicable as we normally understand in a normal office which we work, but when you are going to have a client in the Gift City, all this together would become applicable when you are going to set up an office in the Gift City. And besides this, there are a lot of firms which also provide funding facilities or arrange for funding or do advisory for funding, which also is a big chance which is possible in the Gift City or IFSC as such. Now with this, I'll take you to the permissible activities which are there in the Gift City, and you have got these sectors which are clearly the BFSI sectors as we call it, the banking, financial, insurance sectors as we call it. Besides that, you have the aircraft and ship leasing which is there. Now, all of that is really something where we have to look for clients, the banking, capital markets, finance, insurance, aircraft and ship leasing. We as chartered accountants can fall in the activities, which is the last one, which is the ancillary services. And all the professionals who have set up their offices in the Gift City and registered with IFSC are clearly falling under that ancillary services. And our clientele will be in all the earlier 6 activities which are permitted in the Gift City. Now, chartered accountant firm can therefore register under the business ancillary services and cater various professional services subject to the norms which are in the IFSC. And all this clearly also is within the realm of the code of ethics of the institute, because the code of ethics clearly says we can do this business consulting services which are there. So a lot of these things will clearly fall into that business consulting or management consulting services, even within the norms of the council of the institute or within the code of ethics, the revised code of the institute, which is applicable to all of us. So as the IFSC has listed down, we can do legal, we can do compliance work, we can do secretarial work. We can, of course, do auditing, accounting, bookkeeping, and taxation, which is our traditional activities which are there. We can do professional and management consulting services. And IFSCA is trying to add more and more services which can be done by chartered accountants in the Gift City after getting a registration with IFSCA as such. But the first 3 services itself is a large activity which all chartered accountant firms can register in the Gift City and carry out activities which are there. And the institute has also, or the government has also come out with something like a multidisciplinary firm where you can have a single firm with some partners who are chartered accountants, some who are company secretaries, and some who are cost accountants. It is possible that down the line you may, or the government may also allow a legal professional to be a partner with you. So if that really happens, then I think a firm of that stature would be one of the best, would be best place to offer services in the Gift City, because that is what is really required by all the entities which are there in the Gift City. some conditions which you require to satisfy. So it has to be an existing or a newly incorporated entity set up in IFSC. So I believe one of the queries which came up in the chat box was that can I set up a branch of an office there? As I understand, you cannot set up a branch because one of the conditions is that it has to be a newly incorporated entity set up entirely in the IFSC. It can be an LLP, it can be a partnership firm. It obviously cannot be a proprietorship or something. And you need either an LLP or a partnership firm if you are doing attestation services, because the institute doesn't allow a company to be formed if you are doing any attestation services. So clearly, a CA firm can set up a new entity, which could be a LLP or a partnership firm. And if it's a consulting company not doing any attestation services, it could be an Indian or a foreign incorporated entity. Now that could be a private limited company, which could also become a branch or a subsidiary in that sense. The service recipients are entities which are set up in the IFSC. So this is clearly something from a tax-free zone to a tax-free zone and so on. Entities in foreign jurisdictions. So if you are doing, say, outsourcing of tax return filing in India through that new entity in the GIFT city for US clients, that is entities from foreign jurisdictions. And Indian entities who propose to open, set up or carry out operations in the IFSCs or foreign jurisdictions. So this is proposed entities who are going to set up in IFSC. You can also give services to those people, which could be an ancillary service which is permitted in the IFSC regulations. Now, clearly, a lot of advice needs to be given to any entity, any client who wants to set up something in the GIFT city. So, and besides the tax benefits which a client clearly wants to understand or wants to see what are the tax benefits, a client may be also interested in knowing what is the cost involved in setting up a unit in that particular jurisdiction, because it's a new setup. So there would be admin costs, there would be costs of relocating staff, there could be maybe something like travel costs and other costs which are there. So that entire feasibility study is something which a CA firm can easily provide to a client, and also in that whole process also factor in all the tax benefits and other benefits which it can get. Again, which is the correct entity, company, firm, LLP or a trust, that can be decided. And assistance in various business registrations, like getting your letter of approvals from the SEZ, IFSC license, GST registrations. And though the IFSC says it's a one window clearance, single window clearance, which is there are still formalities to be given, because before you really get a registration, there are some interviews which the IFSC officials conduct on the likely people who are getting registration. So we can, or CA firm can assist that business into how to handle that particular interview, what could be typically the questions which are asked in that interview. As of now, we understand that IFSC do not really reject any applications, but as in when more and more companies set up in IFSC, there is a possibility that if some questions are not properly answered to the satisfaction of the IFSC authorities in the interview which they do, they may not grant registration, or they may ask for a resubmission of your application in that sense. So that is something, again, a CA firm can help in the pre-advisory setup. Then once you have a client who is already set up in the IFSC and physically starts the office, all our ongoing services which we can provide, as I listed in the very first slide, your audit and assurance services, which could be audit under Companies Act or under the LLP Act, any other applicable statute, all certifications. And the IFSC authorities will require some certifications on an annual basis. There may be some other certifications which the RBI may require for FEMA compliance. All that can be provided. Your governance, risk and compliance services. Now, internal audit, though Companies Act gives an exemption from that section 138 for not having an internal audit. Now, all companies don't do internal audit only for compliance of a Companies Act. Most companies, especially large entities, do internal audit more for their support and more to get comfort on whether things are working or not working properly. So though it is not mandatory from a Companies Act perspective, I think most companies will ignore that exemption and still get into having an internal audit, maybe of some select areas with a restricted scope on what is the risk they envisage on those particular areas which are there. Compliance audit is something which today becomes very important in India, because if you miss out on compliances, whether it is on direct tax, indirect tax, or your SEZ, then there could be severe penalties or permissions which can be withheld. Then you can take a review of your compliance listing, monitoring, reporting of the applicable compliances. Then a lot of documentation goes into forming these units, especially with the SEZ registrations and all. The CA firm can help in doing that. We can do designing and testing of the Ifsc framework, the SOPs for their operations, and these SOPs can be slightly different from what is operating in the Indian jurisdiction, because some of the tax exemptions and some of the procedures may vary, especially if you are in a SEZ. So the SOPs may need to be drafted or at least modified from the existing SOPs. Systems audit, if you are in the BFSI sector, where systems audit or IT audit, as we sometimes call it, is a very important part of their business. So this BCP, business continuity plan, disaster recovery plan, audit of data security, change management process, and concurrent audits is something which almost becomes a mandatory thing. So if you have got the stock exchanges which are there in the GIFT City, if you have got the banks which have already come to the GIFT City, all this will actually get priority even against compliance audit for all those entities in the BFSI sector which is there. Now a CA firm, if they try to develop their skills and try to get into these things, this is something which the clients or likely BFSI companies will come to the entity which is already in the GIFT City rather than getting someone from elsewhere. Then these are some routine things which are there. Undertake review of transaction documentation, advisory on domestic tax and international tax, audit and assurance for tax purposes. There could be several certifications in Form 15 CB for all remittances which need to go outside the GIFT City and the SEZ. Transfer pricing, whether it is domestic or international as applicable, can be done. Monthly and quarterly TDS, TCS compliances. It could also clearly be your GST or 2A, 2B, 3C, whatever are those numbers, all those compliances which are there. Representation and litigation services, responses to assessment proceedings, GST and customs and advisory. A lot of custom related procedures also may need to be validated because you are in a SEZ and there could be some procedures which you need to follow. As I again said in the very first slide, a lot of CA firms get into this financial support services where they advise a client on to where to get the funding, which is the best source of getting a funding, whether it should be a term loan, whether it should be a cash credit, whether it should be a ECB or something. Now, if the CA firm can also provide these services, it would be better if they can do it straight from the office which they set up in the GIFT City, like arranging working capital, export credit, bank guarantees, letters of credit, or even obtaining those ECBs for those particular clients. Now, these are little high-end services, some of them at least. So tendering legal opinions, drawing up and certifying legal documents like commercial contracts, business charters. In this, a CA firm may not be directly be the best firm to deliver these services, but they can always work with a legal firm. And if the government allows, they can also have legal people as their own partners, or maybe they can employ legal experts and keep them on their roles as maybe a consultant or something. But preparation and vetting legal documents can become an important work in this SEZ, because a lot of things, there would be clearly clauses which are applicable only for this SEZ related activities. So legal advisory and information services like settlement services, accounting review of annual and interim financial statements, bookkeeping services for classifying and recording business transactions. Now, this is something which you can even do as an outsourced function of someone who is even outside the SEZ or someone who is even outside India in that sense. Other tax-related services like reviewing various reports, assisting in preparing documents required by law, admin services, asset management support services, and so on. Now, these are some of the incentives which have already been discussed on the Income Tax Act. There are relaxations under the Companies Act. Now, Dipesh spoke about the sandbox framework for fintech products. Now, for those who are not very familiar, maybe with this fintech startups and IT support for those products, sandbox framework is just a framework set up by regulators, which allows fintech startups and other innovators to conduct live experiments in the controlled environment under a regulator's supervision. Now, if IFSCA is providing this controlled environment where you can conduct your experiments, that's a great thing which they are doing it, because once you are successful in this, that fintech which is there, which is a startup, can really grow multifold and become a unicorn or something in that sense. Now, this is clearly a high-end thing where IT person can even help you to set up this framework or set up these live experiments under a controlled environment, which is allowed under IFSCA. To encourage these startups, especially in the fintech space, the IFSCA came up with this fintech incentive scheme in this year itself. And this is really to provide financial support to the fintech activities by grants based on their eligibility and fulfillment. Now, as a CA firm who is already in the IFSCA, this would be a good opportunity to understand what is this incentive scheme and guide these startups who are coming into IFSCA and tell them whether they are eligible, not eligible, or what can be done to become eligible to get that particular grant from the IFSCA. And as I understand, IFSCA is very keen to provide this support because they really want to finally see to it that most of the fintech startups which are there get office in the GIFT City. So if you look at something like PTM, if you look at something like any other fintech setup which comes in, they would automatically fit into this incentive schemes which are there. So of course, subject to some conditions which are there. Now, the state government of Gujarat will also or has also provided some benefits and subsidies under their IT and the ITES policy. Now, GIFT City technically also falls in that Gandhinagar area, so it's clearly under the state of Gujarat, and all these benefits also can be made, can be given to this IT and ITES companies which are there, again, which CA firm can advise the clients as to this is something, if you qualify, you are also eligible for these benefits which are there from the state government. And if you are having an office in the IFSC, and I believe a lot of people who are on this call could be professionals who have joined from Ahmedabad. For people who have joined from Ahmedabad, opening an office in the GIFT City is geographically not very far, but it would again give them early access to international clients, and it will also clearly put them in the limelight, because as I understand, the IFSCA authorities, including Dipesh and others, clearly want to focus and encourage the local firms, the local chartered accountants to set up offices in IFSCA. I know the experience which Mukesh Khandwala and Darshit, who have gone and set up the office in the GIFT City. Dipesh and his entire team have been very welcoming, and they have gone out of the way, in fact, to help firms like Indian firms who want to set up office in the GIFT City. And I think it is very different than talking to any other regulators across India when you go and meet these people who are there. They are very gracious, they are very welcoming, they are very hospitable, and I mean, they are easily approachable also. So for professionals, especially those who are in Ahmedabad, in and around, say, Gujarat, they would really be very good if they can go to GIFT City and set up something. And if that firm who goes there and sets up in the GIFT City cannot provide all services which I have listed down in the earlier slides which are there, they can always tie up with some other firm who is already in the GIFT City and slowly increase what is their capability or something which is there. However, I mean, as a caution, let me also tell you that the IFSC authorities do not encourage something like office shopping. So they would not encourage that if you are doing, say, outsourcing work of tax returns or accounting or tax compliance, outsourcing of foreign clients, they would not encourage that you just open an office in the gift city only to get the tax benefits or something. They would like to see that you have an office where the people are there and they clearly work in that office for the work which is outsourced by the foreign investors who are there. And one other thing which I have not listed here, of course, is now if you look at foreign big companies who are there, when they approach a professional, they will first ask you that why do I need to go to Gift City? Why cannot I go to a similar setup which is in Singapore or a similar setup which is in, say, Dubai or something? Dubai has a DIFC, which is similar to IFSC. Singapore also is a hub for all these IFSC activities which are there. Now, as a professional, it becomes very easy for us to understand what are the benefits and the disadvantages of all the three jurisdictions which are there. And if we are here in the gift city and office in the gift city, I think giving advice of where a foreign investor would like to finally come and set up operations, whether it's in Singapore or India or in Dubai, is something which an Indian professional can easily offer solutions. And to that extent, the Indian firm who is setting up in IFSC can have a network or a tie-up with some similar firms in Dubai or Singapore and then offer seamless services in all the three jurisdictions which are there to the benefit of the client. Another thing which very recently on an interaction with Dipesh, and I myself interacted with Dipesh on several occasions and even with Sandeep, who is the head of the IFSCA, and Dipesh is in the Gift City operation as such. And they have been suggesting to us that there is something called the Global Treasury Center, which can be set up in the SEZ. Now, they say that if a big corporate group in India sets up a global treasury center in the gift city, and it has to be a subsidiary of a foreign entity. And a lot of these big groups have a foreign entity, so they can always form a subsidiary of that foreign entity. And all their derivatives trading, all their hedging transactions can be routed through this subsidiary in the gift city. Not only will they not enjoy tax benefits on the profits which they make on those treasury operations, they will also have a lower cost of funds because they are operating in a jurisdiction which is not having any restrictions in that sense. So Global Treasury Center is something which I believe people have not yet tried and tested. But if you take big groups, like you can say Amazon, or if you take maybe even an Indian group like Reliance, they can always think of setting up what is called the Global Treasury Center. So far, I believe Reliance has only issued some bonds in the stock exchange in the IFSCA, but they can even consider something like a Global Treasury Center in the SEZ within this IFSCA regulations which are there. So I think a lot of things which can be done, and all firms, all CAs who are on this call should realize that the traditional practice is clearly going down. You cannot say that clients will come to you with filing your tax returns. Everything is becoming virtual now. And rather than waiting for clients to approach you, or even not even know that you are having this capability or something, it is better you start something in the SEZ, in the IFSC, and then start approaching clients. And Dipesh and his team are very helpful in even giving you a list of the 300 entities who are registered in the gift city and telling you that, okay, you can approach these people for this type of work. So they are clearly going to help you in even approaching these clients with a referral or something, that we will refer you to these 300 clients who are already in the registered in the IFSCA and the gift city which is there. So I think the ball is in the court of all the professionals who are there, and the sooner you move to this IFSCA, the better it would be. And if you know, India or the finance ministry has already also proposed a similar IFSCA in Mumbai, in BKC. It is on hold as of now, but sooner or later that IFSCA will also become a reality in Mumbai. Now, if you have already a setup in Gift City, Clearly, the second setup in Mumbai in BKC, which is the hub of this capital markets, clearly that is the way to go for all professional firms in that sense. So I think with this, I am going to stop. There is some time for questions and answers. So thank you very much.
Thank you very much, sir. And I think it is a wonderful opportunity for CA friends, and very rightly pointed out. And this is how the financial service sector is going to look few years down the line. And I think Gift City has a head start in the sense that it is the only center right now available to us. I would now request Ronak to conduct the question answer session. And anyone has any question, please type it in the chat box, or you can also, I would suggest type it in the chat box and Ronak can take the question.
Ronak, you can also decide to whom the question is addressed to.
Sure. So one question we have is from Mr. Kumar. Do the service recipients have to be in the fintech domain, or can it be a client of an industry outside India, say manufacturing industry, restaurants, etc.? This is specifically for bookkeeping services like bookkeeping, taxation, etc.
So I believe this is possible that you can do this bookkeeping services for any industry outside India, need not be necessarily fintech domain, because what is important is the ancillary service you are providing. To whom you are providing, that is not something which is restricted in that sense. So it could be very well a manufacturing setup in USA to whom you are providing these bookkeeping services.
Right. Next is, can a merchant trading business for taking orders of foreign principal on commission basis be opened in Gift City?
I believe it should be possible. I believe that should be possible.
Right. So basically, the trading of goods is not permissible, but anything a commission agent may be allowed.
Correct. But let me tell you, whoever has asked this question, I think it is from Anil Samar.
Anil Samar.
What are your activities which you want to carry out? As I said, there is an interview conducted by IFSCA before they give you registration. So that is exactly what they would try to understand, that what is the business you want to carry out. And if they believe that you don't fit in their permitted activities, then they will ask you to change the business, or they may ask you to withdraw your application or something.
Okay. There are no further questions in the chat box. If anyone has some questions, can you please put up on the chat box so we can have it over here?
I think Ronak, certain questions were unanswered earlier also. Maybe you can take last 2-3 questions from the previous chat.
Hello, Himanshu ji.
Yeah.
Himanshu ji.
Yeah.
Yes, Anil ji. Yes, Anil ji.
Myself, Anil Samar from Oriental Group. And I was basically, have a question on the same for which you have just narrated. That we are into the business of taking orders from foreign principal and giving them orders on behalf of to foreign principal and earning a commission on that. So can we open any unit in
so that's what I answered, that prima facie, I believe, since it's a commission income which you are really dealing in, that it should be possible. However, as I said, you will have to approach the IFSCA with your objects clause and what is the exact activity, and then they will permit you only if it falls within their permitted activities. But prima facie, I believe it should be possible.
Possible. Okay. Thank you, sir.
We have some few questions from CA Subodh Kedia. Can an Indian firm of CA open their branch in Gift City? Whether CA firm can provide their services to companies located in India? Whether CA firm having branch in Gift City can get their professional fees in Indian rupees? And whether the tax exemption will be available to such branch of CA having office in Gift City?
I think.
Gautam, go on.
Yeah. So, Indian firm can definitely set up a branch in Gift City. So that is not a problem. The problem really is this, that firstly, at the time of registry, you are supposed to give a declaration as to the currency, foreign currency in which you're going to transact. So therefore, it has to be in foreign currency or transaction. You can't render service. You can't render services to Indian clients from your unit, from your branch in Gift City. So that is a very important thing, that it has to be to non-residents ultimately that you are rendering the services. So because ultimately, it's a SEZ, it's an International Financial Service Center, which is in a SEZ. So that's the way that they look at it. So ATLA, that's why ATLA, in fact, if you look at SEZ, this is, you had earlier the EOUs, etc., where you could have a certain percentage of sale in a domestic tariff area, and then you had the formula for calculating the exemption, etc. So far as ATLA is concerned, so far as profits from Gift City is concerned, there is no proportionate formula, because your entire thing has to be towards non-residents or to entities which are located in Gift City, which is regarded as a foreign jurisdiction under FEMA. So that's the way that it has to be foreign currency that your receipts are.
So Gautam, there is one more query for you. Niranjan Shah, some tax-related query. It's there on the chat box.
So far as receipt is concerned, I think yes, that question was asked earlier, and I agree that so far as the unit in the IFSC, if the money is received by a unit in the IFSC, now therefore that is a receipt in India, and that's why you have section 80LA, because it is part of the taxable income of that unit in India, and then you get an exemption under section 80LA. So that's how it works. So therefore, it is an income deemed to accrue or received in India, because see, under FEMA, it is regarded as a foreign territory, but so far as tax laws is concerned, it is an Indian territory subject to the exemptions which are given.
There's one question regarding the fees for registration and the procedure for it from Mr. Mohit.
So I'm not exactly aware of the exact fees, but it can run to about 3 to 5 lakhs. The initial fees and everything. Ronak, I think you would be aware of that.
Even I cannot say the exact amount of fees, but the basic concept is each and every services that you provide, it has a separate registration to be done, and each registration has a separate fee. So during the time the interviews are conducted, and when you fill up the registration, you need to mention what services you will be providing, and you'll have to pay the fees for the same.
One question is there about, can we opt for DTAA benefits? See, so far as the, if a unit in the IFSC is concerned, as I said, it's regarded effectively a resident in India. It's part of, so far as that branch is concerned, if it's a branch of a foreign entity. If it's a branch of an Indian company, or, it's a company set up in IFSC, it obviously is a resident in India because it's an Indian company in that sense. So, yes, DTAA benefits would be available, because in case, there is some benefit under a particular DTAA with another country, then yes, those benefits would be available in that entity.
Any further questions? Karan, can we move on to the concluding remarks?
Yes, I think it. Okay, so we have one question from Subodh Kedia. Subodhji, I think you had multiple questions. If you can post them now. So
I think first question, he's talked about tax status of branch of an Indian company and branch of a foreign company. Now, so branch is merely a unit. It's one arm of that entity. So for an Indian entity, if it's a company, the branch is also, it's part of the same entity. It's taxed as an Indian company. If it's a foreign company, then again, it's a foreign company. So far as if it's a branch of a foreign company, that would be the status is that of foreign company then. So really, a branch has no separate existence in law. It's only for the calculation of the profits under ATLA that it is regarded as a separate entity, and at arm's length price, you've got to calculate under domestic transfer pricing. You've got to calculate the.
Sir, I mean to understand is, if there is a branch of a foreign entity, whether any income received by that branch would be deemed to be arise in India only?
See, the question there is that you have certain exemption for non-residents operating in the, so you have certain exemptions which are there. So say for instance, if today that entity is only investing in the stock markets in the IFSC, for instance. Now for a non-resident transacting on the IFSC stock exchanges, there is a specific exemption. If it is not subject to those exemptions, then it will be taxable, but subject to the Section 80 LA benefits. That's the way it would.
Okay. So it would be deemed to arise in India, but subject to exemptions. It would be applicable to a branch of Indian company also and a branch of foreign company also. Subject to exemption of
As I said, for tax purposes, it is in India. It's only subject to certain carve-out, certain specific exemptions which are available.
Niranjanji, if you can mute yourself. Monish, if you can mute Niranjan Shah. Thank you. Yeah, Subodhji, I think your question is answered, right?
Yes, sir. Thank you.
Okay. And all right. Okay, so list of Anil Samarji is asking, can a list be provided for units or sectors eligible to set up in Gift City?
So that list, I think it is all entities in that BFSI sector, no? Whoever is eligible.
I think it's available also on the IFSC website.
Yeah.
On the Gift City website, that whole list is there. Which are the sectors? Which are the
Rishi was telling us last time that they have a lot of brochures and full number of
FAQs are there. Number of FAQs also are there.
Sir, I have a relevant question for a firm of chartered accountant, those who want to have an office in Gibbs IFSC center, whether they can provide a unit in IFSC can provide services to a company which is located in Ahmedabad or in India, anywhere else?
No, that's not permissible.
Not permissible.
You have to render services only to units in IFSC, or you will have to render services to non-resident clients.
Krishna Balaji has said that they can provide services to Indian units for setting up units in IFSC.
Yes, exactly. Only for the limited purpose. And that there also you have to receive the money in convertible foreign exchange.
Receipt should be like convertible foreign exchange.
Yes.
And
only for that limited purpose you are allowed.
But they can provide services to branches of Indian companies who are located outside India, definitely.
Branches of Indian companies outside India, provided it is a eligible service and you bill in foreign currency, should be all right.
Should be okay. Okay. Thank you, sir.
Okay, so I think we will keep that as our last question. And I would now request Mukesh Khandwala Sahib to give concluding thoughts on this very informative lecture.
Good evening to all. Dear friends, we have heard all the dignitaries about the overview of the setup of Gift City, law and procedure relating to IFSC Act, and also the benefits available under the Income Tax Act, GST Acts, and all other acts. We have also understood the other benefits available to the units registered with the IFSC Act in connection with the state declared various subsidies like contribution to PF, stamp duty, electricity charges, and IT policy, and many more. Having heard all the dignitaries, I am just thinking about what is the takeaway for professionals like us from this particular information session. According to me, if you recollect the past, we have witnessed similar breakthrough in 1984 when the tax audit was introduced. Then in 90s, the era of finance and investment companies added the growth to our profession. Thereafter, in 2017, when GST Act was introduced, we got the breakthrough. Now in 2021, we have, I believe the professionals can avail the opportunity to provide our professional services along with the economic growth, adding to that recently Gujarat government IT policy, which the units registered under Gift City can avail the additional benefit. So this is the era where we can take the opportunity, and I believe with my experience that this is a golden opportunity. Every one of the professionals should try to avail it. Above all, we have great experience to deal with IFSC authorities. They are more than happy to help us with regards to the process of registration at the earliest. I therefore suggest all friends not to hesitate in meeting the IFSC authority at any point of time. I believe that it is really an opportunity for professionals to grow their profession and to contribute to the growth of Gibbs City, and ultimately to make the dream of our Honorable Prime Minister into reality. Thank you very much, all my dear friends.
Thank you very much, everyone. And with this, I think we will close the lecture. Thank you again, Gautam Nayak sir. Thank you again, Himanshu Krishnatwala sir. And thank you again, Dipesh sir, to give your wonderful insights. And we will meet next time in another program like this.
Right. Thank you.
Hopefully, we can invite them for that for a physical section.
Bye.
Yes, yes.
Thank you.
Yeah.
Thank you so much.
Thank you all.
Thank you so much, everyone. Thank you.